Hello, everybody. Welcome back to my channel. Today we are looking at risk reward ratios, which is something I can't believe I haven't touched on here, you guys, but I don't think I really have. So we're going to get into what risk reward you should use, how I go about implementing it, and kind of all that good stuff. This was a recommendation from the comments, so I do listen to what you're saying. If you want to see something in particular next that I have not covered, or you want me to go more in depth on, please let me know. I'm always happy to take suggestions. So also make sure you're subscribed. If you haven't subscribed already, I'd really appreciate you doing so. And that is all. We'll just get into the video. So we're looking at our risk reward. The first thing I want to do, you're just going to spot an entry, right? I'm going to look at an entry, a previous entry, okay? And we're looking at AU, the Aussie US dollar. So let's look at this one here, okay? Say we shorted here. So we had a, retest of this strong zone that had been rejected a couple of times, and you took a sell here. This is how I would go about setting up my risk reward. So I'm going to use, we're shorting it. So we're going to use the short position tool. It's found in this section in TradingView. I don't know what the section's called, you guys. I think just the position tool is usually there, but you can also favorite these two. It just looks like three little lines with an arrow in the middle. So that's the tool you're going to use for this, that I use. We're probably going to enter, let's say we entered right here, okay, at the body of that long bearish candle. And the first thing you're going to need to know to determine what risk reward you want to use is, where are you riding to? Okay, so where are you riding? This is going to depend on a variety of things, and I can kind of do a whole separate video on this, but just to get into it a little bit, you really want to go down, like you're going to take your trade to the next zone, right? That's how I trade. So I'm just going to explain to you the way I do it. We're going to take our trade down to the next zone, which would be this one that I have marked, right? Now, we could also make multiple targets. So if you see another strong zone, like down, let's say right here, we have one, and I'm just quickly drawing this in. Let's extend that. I should have had this done. And let's get rid of these. I don't like having too much stuff on the charts because it might throw you off. All right, so this is another zone that we can look and see, all right, price has kind of dropped down there a lot in the past as well. So what I would likely do here, I would make my first target here, and I'd make my final target here. So, meaning I would enter one position the target would be here. So one, let's say a 0.5 position, okay, that would close here, and one position where my take profit was down here. All right, that way I have secured partial profits if we go down here, and then we can try to ride out to the next zone. So that's usually what I do. It's what I teach. So what we're going to do now, my reward, I'm going to drag this down. So this is draggable, okay? And I'm going to take it to my second target, because this is really where I'm going to end up going, right? Now, we want a risk reward of at least 1.5, okay? That's how it's not actually expressed in a ratio on TradingView. It's just a very similar, but it's a dot in the middle instead of instead of looking like a real ratio. I can't speak today. So what we're going to do is drag this down, and I'm going to place, like, my stop loss, you guys, in very simple terms, is just always placed above my wick. Like it really doesn't get any more complicated than that. I literally look at my rejection wick, which is this green one on the 4-hour chart. Okay. I look at my rejection wick and place it a couple pips above. What do I mean by a couple pips? Literally, you guys, I just kind of eyeball it. So I want to give my trade a little bit of room to breathe. If we actually look, because I get asked this all the time, how many pips is it actually? Let's count. So this is just a little pip counter tool for those of you who are wondering. So above the wick, it's about 5 pips. So if you want to make it 5, you can. I just eyeball it. All right. That is normally where I keep my stop super tight. Okay, that's my style of trading. It allows me to lose a lot more because my reward, my risk reward, and I mean in this case it's 2.6. Okay, so that's really high, and usually I wouldn't have a risk reward that high, but it's always at least 1.5. Okay, so if we drag it up to our first target, it would be 1.2. Yeah, so I would need it to be a little bit, I'd need my target to be a little bit bigger than this, but that's why we ended up taking it down to the next one anyway. So it's not always going to be this big, but I like it to be at least 1 to 5. Okay. It just, and again, because that allows me to lose more. Now, what I will do is secure profit. So usually what I like to do when we get to 1.5, okay, so when we get to 1.5, if I hadn't already, and 1.5 is about here, which is in our zone, okay, so that's in the zone that we were initially taking profit from. I would take, once we get to the 1.5 ratio, I always tell people move your stop loss. So let's say your stop loss is up here. Let's make it red. Hang on, and then I'll drag it to where we said it was. So our stop loss is, and I already had one there. My goodness, I'm losing my marbles tonight. So our stop loss was about here, let's say. Once we get to a risk reward, so once price has dropped down to this zone here, I'm going to take this and drag it to my entry point. So my entry was around there, let's say, okay? What this does is if price completely reverses on me, okay, I've now made this trade risk-free, all right? And as you can see, it wouldn't have completely reversed. And the thing is with this, I mean, people ask me all the time, but aren't you afraid, like, you know, it's gonna come back up and then shoot down? That doesn't happen very often. It definitely happens. It can happen that it'll kind of come back up, test your stop, and then go back down. But it doesn't happen often. If price is shooting right back up towards this level at a really fast momentum before getting to a key zone like this one or this one, that's indicating to me that the buyers are taking back control anyway. So it's not a trade I would want to have been in anyway. So I'm fine with that. I'm okay with losing because my wins obviously are much higher than my losses. So I'm okay to take certain losses, and I encourage you to get used to doing that too. I'm really quickly going to show you the other tool, which is just, and you guys probably already know this, but I'm going to go through it, the long position tool. So we'll look at an example. I'll get rid of those dots of a long position that we could have taken. So let's say we're looking at this one here, this entry point. So we'll look at this zone maybe. Yeah, let's look at this guy here. And I'm, again, really quickly just going to draw a zone in so that we have something to eyeball. And what we're getting, so I'm seeing here a rejection, okay, a rejection of this zone and a push up. So we could take a buy here on this candle, all right. And as we move up, or as we take the trade, we want to set a nice risk reward and determine what our risk reward is going to be. You're going to take the long tool this time. You're going to drag the end of the green to your target, which would be our next support or resistance / zone, whatever you're using. You don't have to use zones. You can use support and resistance. I'm seeing a support around here, okay, / resistance probably in the future. So there's a nice level here. I'm not going to draw a zone in just because I'm trying to keep this short and sweet now. And then our stop loss is going to be below the wick. And I mean, again, this is incredibly high. We could even ride to a zone lower, but they're not always going to be this high. These examples are just kind of turning out that way. I don't always have crazy high risk reward, okay? But generally, again, you want it to be 1.5 or higher. So that is all I do. I mean, my stop loss is standard. So this stays the same no matter what happens, all right? I'm not going to, unless my rejection wick was crazy long, then I might look for another wick on the 15-minute. I'm not even going to get into that because I don't ever really often do that. I'm going to keep my stop loss there, and then I'll just kind of assess my target. If there is no target that I see appropriate giving me at least a 1.5 reward, I do not take the trade. Okay. I don't take the trade. I need it to be a strong enough trend with strong enough levels that I'm at least getting a 1.5. I do generally have a very sharp or a very strict stop loss. Okay. So, yeah, I mean, that's my style. You do not need to have a stop loss that's so close. I mean, you can definitely move it. This is just my style of trading. Other people determine stop loss in different ways. That's fine too. I mean, you have to keep in mind that we all trade differently and there's really no one right way. Okay. I'm just showing you the methods that work for me that I find really easy. Okay. So I think that's it. If you want any more videos like this, I know this was a simple one, but I did get asked about it a lot. If you want me to cover something I haven't kind of talked about yet, or if there's something that you want me to do, let me know. I was thinking the next video I'm going to do more markups because you really liked videos like that. So that's all I have for you. Enjoy your weekend. Thanks for watching. If you are watching on a Friday, you're awesome. And I'll see you in the next video.